the market is going back to being bullish. And now we have a chance to make the investments of our lifetime. It's like investing in the early 90s. In the first iteration of the internet. And very few people notice, especially if you're outside of crypto. Bitcoin and crypto is growing faster than the internet. This chart shows Bitcoin from 2014 versus the internet in 1990. Every single year, Bitcoin in terms of adoption is growing faster than the internet. AI creates value at machine speed, and crypto moves that value at the speed of the internet. Whether you like it or not, the world is changing right before our eyes. So why does AI need crypto? AI agents is the biggest trend of 2025. We have all these AI models, O3, Claude, and others all competing. And guess what? How do they pay each other? How do they transact with each other? How do you build a way to transfer value, money, digital? Crypto is being adopted by the next generation. 55% of Gen Z investors own crypto versus only 41% in stocks. So the future generation has already chosen crypto as its next asset class. This snowball is getting bigger and bigger and bigger. Crypto is swimming with the current. So it'll be in flow. It won't be against the flow. You can find great, incredible ones that are life-changing, right? So using this framework on our platform called Tokenmetrics, we've been able to find the following projects very early on: Polygon, Helium, Chainlink, Filecoin. Let me just show you how you can actually use our platform today, right now that the market is bullish, to invest or find the next big thing. So the first place I like to start is, hey, Tokenmetrics family, welcome back. I know it's been a while since we've done a video, but our AI market indicators just flipped bullish. So I had to go back to the tape and do a brand new video for 2025 and talk about why we're about to enter what we think is still the longest crypto bull run in history. It might seem far-fetched. Yes, I know we've had a very large drop. I know lots of altcoins are down 95%, but guess what? Our market indicator called it to the T. We'll get into it, but I want to gather all the alpha, all the analysis we've had and share with you over the last few years and show you why this point in time, we're about to flip into not just the biggest run in history, but we're about to accelerate crypto's future. Crypto, as I mentioned before, is tied together with AI, but I'll go through and do a deep dive why I think that's the case and why I think America is about to become the crypto capital of the world. Let's hop into it. If you're brand new here, my name is Ian Bellina. I'm founder and CEO of Tokenmetrics, also a general partner of Tokenmetrics Ventures, a crypto investment firm. We made over 45 investments in the crypto space. Notable projects include Peak, Andrina, and some others. Also the author of Crypto Investing Guide, available on Amazon and Audible. If you're brand new to the crypto space, or if you know anybody who's brand new to crypto, definitely the go-to book that takes our research, our framework of Tokenmetrics, and tries to teach it to people who are brand new to crypto, or even maybe have been in crypto for a while, but haven't really had that framework on how to be data-driven in terms of fundamentals, technology, due diligence to invest in crypto. Prior to that, I was working in tech for IBM and Deloitte, and background is in computer engineering. Enough about me. I'm going to assume we're starting from the basics, because I want this to be the go-to video you can share with anybody who's still on the sidelines, not in crypto, who thinks maybe crypto is a little iffy, a little sketchy, because everybody has to have their coming to crypto Jesus moment. This is actually a talk I gave at MIT last week, but I'm repurposing this for YouTube because I don't want anybody to miss this boat. The same way other people paved the way forward and showed me why crypto is the future, this is going to be the first time I've done this end-to-end in this depth on why crypto is the future. So this is definitely a video I encourage after you're done watching to share with all your friends. Let's hop into it. A quick history on crypto. So we had the first Bitcoin Genesis block in 2009. Bitcoin was invented and it created value that cannot be censored. For the first time in human history, two people on the internet didn't have to trust each other to transact with each other. But let's take a step back. People think of Bitcoin as just money. No, the blockchain, Bitcoin being the first blockchain, innovated by creating the next evolution of the internet. You see, we had Web 1.0. Web 1.0 is when a website can just purely publish information. Think the dot-com era. They were just purely publishers. Well, actually, even before the dot-com era, think the dot-com era. Websites were purely just publishers, one-directional. Web 2.0, basically social media, user-generated content, allowed not just information to be published on the internet, but for the end user, you, to also publish as well. Think blogging, think comments, think Twitter, Instagram, Facebook. Web 3, the innovation of Bitcoin and the blockchain was very innovative because for the first time, it took the Web 2.0 world and removed the man in the middle, removed the central entity. It allowed anybody online, whether you're in the US or China or Russia or anywhere, to interact with each other and still have trust, thanks to cryptography, thanks to math. So to visualize this, right, we have Web 1.0, where it's just one directional, This was the first dot-com boom. The Googles of the world, the Yahoos of the world, MSN, Lycos, if you recall, all those search engines back in the day. That was the first evolution of the internet. Web 2.0 was interactive. Think YouTube. People could post a video and it goes viral. TikTok, Instagram, Reddit, all these forums, discussions. That was the evolution of the internet. And now we're in Web 3.0, where we're able to keep everything in Web 2.0, but not have to trust anybody and still guarantee trust. That's the power of Web 3.0. But let's kind of break this down into more depth, right? When it comes to Web 3.0, this is how you could kind of view the Web 2.0 world versus the Web 3.0 world. In Web 2.0, let's take Bob and Alice. They want to transact online. Typically, you go to a central counterparty, a bank, a custodian. So if I want to send money to somebody in the Web 2.0 world, it happens via a bank, think Chase, Bank of America, or even other platforms like PayPal. There's somebody there who's in the middle that you have to trust. That's called a centralized transaction. In Web 3.0, we're introducing decentralized transactions. We remove that central entity. Imagine Bob and Alice being able to send money globally without having to go through PayPal or Bank of America or JP Morgan, Chase. That's the power and the transformation of Web 3.0. We can guarantee this trust thanks to innovations like the blockchain and Bitcoin. But if we take a step back and go all the way back to ancient history, money has evolved. Money started with bartering. Cavemen would just exchange and barter. Then went to physical items like seashells, to gold being a store of value, to coins, to paper because it was easier, more fungible, plastic cards, digital money. And yes, the internet had digital money, but there was still a central entity you had to trust. There was still a PayPal you had to trust. There was still a bank you had to trust. And sometimes they don't work 24/7. Sometimes you have to wait for a week. Sometimes they can shut down your account. How do you transfer money with somebody across the world in a trustless way with no central entity? That's why Bitcoin was created by Satoshi Nakamoto. But why I say don't view Bitcoin or crypto as just digital money or digital gold, because it is a store of value. Think of it as the next evolution of the internet. This is a chart that shows both Bitcoin and crypto compared to the growth of the internet. And very few people notice, especially if you're outside of crypto, Bitcoin and crypto is growing faster than the internet. This chart shows Bitcoin from 2014 versus the internet in 1990. Every single year, Bitcoin in terms of adoption is growing faster than the internet. That's why you can't view this just as digital money, but it makes sense if you view this as the next internet. Of course, Web 3.0 would grow faster than Web 2.0. Right? And the same thing is happening with crypto adoption. So whether you like it or not, the world is changing right before our eyes. Then let's go to Ethereum. In 2015, Ethereum created a way to program money. It created smart contracts. It took the innovation of the blockchain and created a second blockchain where you could actually not just do just pure store value or transfer of cryptocurrencies, you could actually program contracts on the blockchain. And they invented smart contracts. What is that? You take two different parties anywhere in the world, they can get into an agreement in the same way you get into agreement with a bank or anybody via a written contract, and you can put that contract on the blockchain to guarantee that trust with no central entity. Take an example use case, buying a house. Typically in the Web 2.0 world, you'd have a buyer, going back to Alice in this instance. If she wants to buy a house from Bob, she would have to go through a bunch of different counterparties, from brokers to insurance to lawyers. They write all these different contracts. It's very, very expensive. And you have to trust them in the middle. With Ethereum, they created something what's called as code is law. They took those written contracts, turned them into programming code, and put it on the blockchain to where two people could trust each other without having to rely on those central entities. Imagine being able to send somebody money, crypto, halfway across the world, and you know if they get that money, the title is automatically transferred to you, all via code. No having to call a lawyer, sign contracts, go through all these different hoops. It was purely automated. That was the beauty of Ethereum. And that unleashed 2017, 2018 bull run. Well, 2018 was a peak. By that altcoin season, the ICO mania, token sales, a new way to raise capital formation. Because, for instance, investors could send money, ETH, and get back a token. And then we had 2020 and 2021, we had DeFi and NFTs. This created a whole new class of assets and a whole new class of use cases for crypto built upon Ethereum. Programmable money, smart contracts. So let's go back. In finance, in the Web 2.0 world, we have all these different use cases. We have money, banking, whether it's investment, commercial, central, exchanges, brokerage, insurance, payments, asset management. All these are traditional finance services. TradFi, for short. In Web 3.0 world, there are already counterparts for this. They're doing the same things from Web 2.0 world, but in a Web 3.0 way, where it's fully on-chain via code. code is law. No central entity is gatekeeping or picking and choosing or playing favorites. It's all automated via code. So you can create digital money via stablecoins or digital gold with Bitcoin. Or you can have exchanges like Uniswap, where two people can come and swap crypto assets without having to rely on New York Stock Exchange or go to Robinhood. This is the beauty of Web 3.0. And to give you perspective, just this week, there's almost $100 billion in DeFi, in decentralized finance. That's $100 billion right now in total value of the assets in these smart contracts in the whole crypto space. So, and this is not even the peak. Back in 2021, 2022, it went to almost $200 billion. Just think about that for perspective. This shows you the future of where crypto is going and where use cases of the Web3, the next internet, are evolving. And let's talk about NFTs, non-fungible tokens. But to understand that, you have to understand what's fungible. Fungible means that something is mutually interchangeable. Think money, fuel, commodities, right? If you borrowed one, it will be odd if somebody else returned you and it was a different one. Then you have non-fungible. Then you have non-fungible units that are not interchangeable, right? So for example, houses, art, people, used cars, right? So if you borrowed one, it will be odd if you returned a different one. But this created the NFT marketplace. And this became a pretty big marketplace last cycle. It minted big platforms or marketplaces for NFTs like OpenSea, which has more than 14 billion in volume with over 1 million traders, with the average price of an NFT is almost $1,000. Then you have other use cases like the NBA partnered with NBA Top Shot to create digital collectibles on the blockchain. Think of NFTs as basically digital art, right? If you're an art collector, if you buy a piece of art, they give you what's called a COA, Certificate of Authenticity. It's basically a receipt it's basically a serial number that shows you own that piece of art, right? That way, nobody can just go say they own a Picasso because there's a central ledger that's shared with all the big art places where they know these are all the pieces by Picasso and these are their serial numbers. So if somebody tries to fake it, they know. NFTs took that same concept and put it on the blockchain. That's all they did. They took out that central entity, that art dealer, that art clearing house, that museum, and put everything directly in the open, made it open source, made it public. That was the power of NFTs. Although NFTs have had a large crash, a large fall from grace, there's still a lot of money being moved in the NFT space. There's almost $2 million being moved daily just on OpenSea in these NFTs, and about 65 million in the last 30 days on OpenSea. Okay, so now we're getting more closer to the present. We're going into 2024. We had the fourth Bitcoin halving, but we also had the first institutional green light for crypto with spot Bitcoin and crypto ETFs. And if you just put this in perspective, this is the Bitcoin ETF. Late last year, it surpassed the QQQ ETF in cumulative fund flows, meaning that there's more money in the Bitcoin ETF than the QQQ, which is a very, very popular index ETF or index fund, an ETF. But for perspective, these are the top ETFs last year. You have the Vanguard S&P 500 ETF. This is based on 4 fund flows. You have the iShares S&P 500 ETF. S&P 500 is basically the top 500 companies in the US. And see here, the third one, iShares Bitcoin Trust ETF. This is a spot Bitcoin ETF. 47 billion was put into this ETF. It was the third most popular ETF. Just put that in perspective. That with what's happening with over 100 billion in DeFi assets in terms of total value locked, and you're starting to see a trend. But we all know AI is going to be big. AI is going to be one of the biggest transformations in human history. But why is AI tied to crypto? For perspective, let's go back to all the past technology shifts. Horses, going from horses to cars, that was about a 5x increase in speed. Going from cars to planes, that was about a 10x increase in speed. And going from planes to basically AI or autonomous intelligence, think like robotics and all that, that's an infinite increase in speed. Especially if you add in quantum computing. Google recently put out quantum computing chips. So the speed growth is going to be exponential. It's even almost impossible to measure. So AI creates value at machine speed, and crypto moves that value at the speed of the internet. So why does AI need crypto and vice versa? Let's take AI agents. Everybody from OpenAI, Sam Altman, and others are saying AI agents is the biggest trend of 2025. We have all these AI models, O3, Claude, and others all competing. And guess what? How do they pay each other? How do they transact with each other? Before entering a world where there be billions of AI agents, how do you build a way to transfer value, money, digitally, in a way that's trusted? If you're dealing with an AI model from the US versus one in China like DeepSeek and others, how do you program that trust and send money? That's the epitome of crypto. Crypto is trusted digital money or code is law. And then who owns those AI models and that data? With crypto, you can put all that on the blockchain. You can have on-chain provenance. You can even add economic incentives and share revenue in an open source fashion, in an open financial world via Web3. And how do we trust those outputs? How do you trust a model if it's closed source? Or if it's open source? You can put those inference and those weights on the blockchain and have historical proof of the weights and outputs since the beginning of that model. And how do we align all these incentives? Crypto is all about creating the right economic incentives, whether it's through governance or whether it's through bootstrapping networks from the ground up. So crypto is the native financial layer of this world we're entering in, AI. That's why AI and crypto are intertwined. The two, as I've mentioned before, are a marriage made in heaven. So let's take this ecosystem landscape map of the whole AI space. Well, not all of it, but a good portion of it. This shows the Web 2 world. So you have all these different platforms, from ChatGPT to Midjourney to the models to the compute to the data. Well, guess what? There are already Web 3 counterparts doing the same thing. Now, they're still pretty early, but they're doing just this and taking out that central entity, the gatekeepers, because the world's evolving from Web 2 to Web 3.0. And we're seeing this trend is happening whether we like it or not. It might take a while, just like the internet back in the 1990s took a while. But now we're in 2025 and the internet is everywhere. The people who do not believe in the internet, I don't know where they are now. This is the next evolution of the internet, Web 3. Why is crypto the future now? Now that we have that AI lens of why the two are tied together, how do we digitize value? I mentioned crypto is a way to program money or program code in a trusted way on the blockchain. Well, did you know one of the biggest asset classes in all of crypto are stablecoins? And stablecoins in 2024 surpassed the amount of value being moved on the entire Visa payment network. Think about that for a second. Yes, Visa. Visa, the credit card issuer that is used pretty much everywhere. Back in 2024, Visa had about 13 trillion in total assets being moved in terms of transaction value. Stablecoins officially surpassed Visa, moving 15 trillion or more in terms of transaction value. So this was one of those coming to Jesus moments where people are sending money halfway across the world very fast via stablecoins on the blockchain. And what are stablecoins? Stablecoins are basically it's a cryptocurrency backed by an actual fiat currency. Let's say you have a bank account, for example. Let's say you have $100. You can send that to basically a bank. That bank will then mint a stablecoin, and that stablecoin is basically a token that's pegged one-to-one to the assets in that bank, to your $100. So if you have $100 in the bank, they'll give you $100 of that stablecoin, and it's backed by some. And then you can send a stablecoin anywhere in the world to anybody to pay for anything because it's minted and sent to your crypto wallet, to your digital wallet on the blockchain. But guess what? Once I've minted a stablecoin, I can now trade it to anybody else. They don't have to go to the bank to get the dollars. They can just buy that stablecoin with ETH, with anything else. So it's a great way to on-ramp or off-ramp off of crypto. Now, for instance, there's a platform I just signed up for, and I love it, called SpherePay, where you're able to connect your crypto wallet, take, for example, Solana or Ethereum USDC, to your bank account and send funds there. You can send up to $20 million, and they'll auto-convert it from stablecoins to your bank and vice versa. That's a game changer. And things like this, the infrastructure behind all this is now beginning to grow, especially with the stablecoin bill coming out later this year, which I'll get into. And then we're entering an AI native economy. In the same way how websites before were built for the web, then we innovated and built mobile devices with the invention of the smartphone from Apple, the first iPhone. Then websites began to have to be built to be mobile native first. Well, we're entering into the same concept with AI. A lot of things will have to be AI native from the ground up. There are more than 30 billion API calls happening per day between large language models, between agents, ChatGPT, Claude, Mistral, Meta, and Llama, all these different models. How do you transact with each other? Digital money. How do you trust each other? The blockchain. And how do you program ownership? I mentioned before, DeFi is a great use case. More than 100 billion locked in smart contracts in DeFi. And here's one very fascinating stat that shows you where the future is heading. Crypto is being adopted by the next generation. 55% of Gen Z investors own crypto versus only 41% in stocks. So the future generation has already chosen crypto as its next asset class. Now, if you put all this together, you start to see that this is a large cascading trend. This snowball is getting bigger and bigger and bigger. So this is why, without Tokemetrics AI market indicators flipping bullish in the last week, this is an opportunity to invest at quite the low. Because in a post-halving rally, typically you don't really get these lows, but we had quite the drawdown due to the macro, due to the tariff wars happening. And now we have a chance to make the investments of our lifetime. It's like investing in the early 90s. In the first iteration of the internet. And then in 2025, there are a lot of inflection points happening due to policy. So the US is imposing tariffs universally, globally. 10% tariffs at least. They're still negotiating, but they also want to repeal income tax. They want to remove taxes on anybody making under 150 to 200K. Hasn't been confirmed, But all this because they want to take the source of income, of tax revenue, to be based on tariffs. This is something that's been done before in the past, but the White House also wants to make the US the crypto capital of the world. They want to take all that capital in crypto that's been offshore to be brought onshore into the US. And they've put out draft executive orders to create a strategic Bitcoin reserve. There are 21 million Bitcoin out there. The way Bitcoin works, there's new Bitcoin being minted about every 10 minutes, every block. A block is about 10 minutes. And the rate of issuance of new Bitcoin is cut in half every 4 years. So for example, if there's 10 Bitcoin being minted every 10 minutes, after 4 years, it's cut to 5 Bitcoin every 10 minutes until all the Bitcoin have been minted. And the US wants to go out there and buy up to 5% of the total Bitcoin supply. That's a lot of Bitcoin. And now it becomes basically a race of nation states to make sure nobody is left without any digital store of value in this next internet we're about to enter. And then for the first time, there'll also be clarity with stablecoins. A stablecoin bill is being proposed and will likely pass by September or the fall of this year. Why is that big? Because for the first time in history, crypto will be swimming with the current. All these numbers I've mentioned before, all this has been happening. Crypto has been swimming against the current. There's not been much pro-crypto regulation. Now, for the first time, we have a pro-crypto Congress and Senate and administration. So on all sides, pro-crypto law is being passed. And I mentioned there's more money being moved on stablecoins than Visa network. And that was that without having much clarity on the stablecoins. Now, the US administration is going to put clarity, legal clarity for stablecoins, which means institutional firms, traditional banking institutions like Bank of America, JP Morgan Chase can hold and custody stablecoin with a legal framework and not have to worry about any potential repercussions. The Bank of America CEO has gone on the record saying that when this bill passes, Bank of America will get into the stablecoins. Think about that. One of the biggest banks in the US and the world getting into the stablecoin market. Any bank that does not get involved will be left behind. They'll go the way of Polaroid camera and Kodak because this is the next evolution of the internet. So for all these companies to innovate and keep up with the pace of the next internet, this is a moving locomotive. This rocket ship has already sailed. So now for the first time in history, crypto is swimming with the current. So it will be in flow. It won't be against the flow. Okay, so this creates the perfect timing for us to invest in crypto. Because if you break down Bitcoin, the first ever cryptocurrency, by halvings, there's what's called a pre-halving rally and a post-halving rally. A pre-halving rally, you have a very generous return on investment. But the real money is made post-halving. That's when the real altcoin season starts, right? So the first halving, you went from 6x to 90x. The next one, you went from about 3x to 30x. And the next one, about 3x to 8x. And now we kind of have the same prediction. We think Bitcoin will go to maybe about 140, 145K. Some people are a lot more optimistic. Anything is possible, but we like to stay cautious. Right now, Bitcoin's at about 94K. But historically speaking, while the gains on Bitcoin every cycle, every halving, diminish, the length of the post-halving rally or the entire cycle increases by on average about 25%. That's great news because while Bitcoin is basically digital gold, sometimes I call it a bond of crypto because it's not, you don't invest in Bitcoin expecting the next 100x. You invest into something as a hedge for inflation and all that, something that will have modest returns. But when those returns happen, a lot of investors and traders take their profits from Bitcoin and rotate it into new cryptocurrencies. So you have this flow, this trickle down flow of money from Bitcoin to the large caps like Solana, Ethereum, XRP, for those XRP fans out there, and then into other altcoins. Then you have altcoin season. So we haven't really had an altcoin season this cycle. Even though the halving already happened, we haven't really had an altcoin season. We had a pre-halving rally because the total crypto market cap hasn't really changed much relative to last cycle. Last cycle, it peaked at 3 trillion total market cap. This cycle, it went to 3.8 trillion, then went all the way down. Right? Looking at our Tokenmetrics market indicator, which is available on our platform, just go to tokenmetrics.com. You can see here, this cycle, we peaked at 3.8 trillion. But why do we like AI-driven investing or trading? Literally, our AI indicator called the top perfectly. Now, we're not always perfect. We'll be honest, but this is why it pays to have a GPS, AI to help navigate you through this crypto volatility. Basically, the market went from 3.8 trillion all the way down to 2.8 trillion. Over $1 trillion in value was lost in the market. This was 2 days before the inauguration for the US president. Why is this key? The macro and everything, the tides were changing, things looked positive. People thought crypto was going to the moon and beyond. Our AI said, hold up, something's not right here. Go bearish, go on the sidelines, go from risk on to risk off. And now, for the first time since January, we're now in April, it's printed a bull signal. The market is going back to being bullish. So this is based on looking at all the grades on our platform. We take different data points, and I'll go through how we actually do all this, right? Because at Tokenmetrics, our edge is using AI to create trading signals for investors and traders, right? We cater whether you're a long-term investor or short-term trader. We take all the different data points out there, from the market data, the quantitative data, social data, developer data, and just give you a grade. Think of it as kind of like a GPS or a credit score on what to trade or invest in. And we're also now evolving into an actual trading platform. But we help people preserve large drops in value. For example, we helped people back in Terra Luna last cycle. Our signals went bearish 30 days before it crashed and went to zero. And even recently, before Mantra OM dropped 90% in a few hours, our signal went bearish a month before that. This is the beauty of having some kind of navigation, some kind of guide, some kind of co-pilot with you. And it's very simple. We have a very simple gauge. We tell you strong sell, neutral, buy, or strong buy. For either trading it, if you're looking for more short-term trading, or as an investor, if you want to hold for a longer period of time. And we know AI is the future, and we've been building our own AI agent that's available on Tokenmetrics. Think of this kind of like as ChatGPT for crypto. It's also available on Twitter. If you go to 0xTMAI, or just search for it, it's basically an AI agent you can talk to for crypto. You can tag it, it posts news, analysis, and insights, and signals on alpha. We've worked a lot on this. It's available for free on X. And now, this is the holy grail people have been asking for. We're getting ready to launch our AI indices and trading agents. Our AI indices will be coming as early as next month. Within the next month, we'll be launching this that lets you passively buy a basket of crypto indices on chain for different sectors. So if there's a hot sector, for example, like artificial intelligence or AI memes or real world assets, you can go on our platform and buy that index. So we'll launch this based on the top market cap for different sectors. And then we'll be working in our AI signals to know when to time the market to sell or buy, basically going to stablecoins. So they'll be actively managed indices. And this will be, if you hold our token TMAI, you will have an edge. You will have reduced trading fees and can also earn a portion of the revenues if you're staking the token. And to stake the token, just go to TMAI, which is the symbol of our token, .tokenmetrics. Stake, you can stake anywhere from 1 to 12 months. It will give you basically your stake tokens as VETMAI. And stakers, once we launch the indices and trading agents, based on the amount you have staked, you can earn a portion of the trading fees, right? So for instance, if you own 1% of the staked tokens, you'll earn 1% of all the trading fees being sent to the Tokenmetrics DAO. We have a legal for-profit DAO set up in the Marshall Islands, one of the first regions to have pro-crypto framework for us to do this. So we can legally give up revenue share of the trading fees. This is coming. I highly encourage you to check it out. Go to tmai.tokenmetrics.com. Our token is available on Bitpanda, which is kind of like the mini Coinbase for Europe, or on Gate, MEXC. And for DEXs, it's on Aerodrome. Not Uniswap. Aerodrome has more liquidity because it's built on Base. It's the leading DEX on Base. And we also launched our API. So I highly encourage you to go check it out. We've recently got back from the BitTensor Tau hackathon. We were sponsors and kind of helped put on the hackathon. People built a lot of stuff with our API and SDK. And I was also at Ethereum Bucharest in Romania doing the same thing. So we're doing this developer crypto world tour. If you want us to come to a city near you, let us know. Sponsoring prizes. We're giving out $10,000 for people building on our platform. And if you're a developer, go check it out. If you want to raise capital and you're building something cool, just email ventures@tokenmetrics.com with an actual demo and code of what you built using our API and SDK. Go check it out. Just go to tokenmetrics.com/API. Okay, but let's say you're really brand new on crypto. How do you invest in this new future of the next internet? Well, we do have a book called Crypto Investing Guide available on Amazon and Audible, but I'll try to sum up that book in one page if possible. We basically have the first process, which is kind of like a screening process. We look at the fundamentals of a project. Yes, I know it sounds crazy, but in crypto, you can actually do fundamental investing. You can do value investing. I come from the Warren Buffett, Howard Marks school of thought of being a long-term value investor. And the things you look for are the market, the traction, the team, the roadmap, tokenomics. All these are different data points you can factor in, create a grade, a fundamental grade. And if it crosses a good enough threshold, you can move it to the next phase. This is typically done by investment analysts. Then we have our tech review, also called code review, where we have our blockchain engineers. These are actual coders, developers, going through the beauty of most projects out there, well, not all, but some in crypto, they're open source. It's open finance. We can look at the architecture, the code quality, the security. They can download the code, run it, test it, see if there are any bugs, if the coders actually are cracked coders, as they say, and give it a technology grade. That helps filter out more of the bad products, especially the rug pulls. And then you can also look at on-chain data, quantitative data. So if it's already trading on exchanges, you can look at, is there liquidity? Is there momentum? What do technical indicators say? Or for instance, is there a large portion of holdings in the top 10 wallets? Think of this kind of like the Gini coefficient, right? How centralized is it? Or is it really in a lot of hands of a lot of people? Is it really decentralized? All these can help you make an informed investment decision. And then you can factor in different risks, right? So for example, some sectors might be so new, so volatile. For example, memes where, you know what? Memes, the only thing that matters is liquidity and the community. Everything else does not really matter, all right? The tech might not matter as much. On the fund side, with our fund, because we do invest in venture capital, we like to then send this to investment committee. But you can be your own investment committee. You can have a team of other friends where you all share products you like with your own framework. And then if you all like it, I know some people do this, then you all invest. But this is how you can invest in crypto if you're brand new. So you can do that yourself, check out the book, or you can also leverage our platform to guide you in all this. Or next month, you can just invest in our AI indices that already does all of this for you. And why we think having a framework makes sense. You can find great, incredible wins that are life-changing, right? So using this framework from the book and our platform called Tokemetrics, we've been able to find the following projects very early on: Polygon, Helium, Chainlink, Filecoin. These are just a few. Back in 2018, we held a blockchain pitch competition, kind of like the world tour we're doing now with developers, but this was more so for founders and entrepreneurs. The Polygon team Sandeep came and pitched, and the rest is history. This was over a 400x return, meaning that $1,000 in this turned to $400,000. The three founders became billionaires. They're now doing new projects and have kind of moved on from Polygon. But this is a foundational win that came from having a framework, right? We discovered this almost more than a year before it launched on Binance. Once it launched on Binance, you could still buy it on public markets at basically at a penny to 3 cents, and it went all the way to $2.70. So there's value before the markets, pre-market, and there's value in public markets, buying on exchanges. Other examples include Helium Network. This was also the same month, August 2018, more than a year before Multicoin invested, and they kind of blew up and became big. But the fundamentals, the framework showed us this was building something incredible. They were building the next IoT networking internet. It was basically this device, this mobile hotspot. You could just plug it in, share your internet access with IoT devices. Then eventually they got to more than 1 million devices. This was like 2 years later. But our research helped us find that early. And then they took what they did with bootstrapping that network and launched Helium Mobile, a crypto Web3-based telecom carrier, right? And now they have almost 100,000 devices globally for Helium Mobile. They partner with T-Mobile and these big brands. So this is what's happening in this Web3 world. They're real assets. It's not all just memes and all that. There's actual value being built by real companies. This is one of my favorite sectors called Deepin. Some products we have invested in that we like, because we made over 45 investments. And it's very hard to pick those that we think are going to be the best, right? Because it's like picking between kids. But if we had to pick like 10% or like a handful, these are the ones that stand out. Peak. They basically are merging what's happening in robotics, machines, and AI, right? So Deepin stands for Decentralized Physical Infrastructure Network. Right? And DeepI is Decentralized Physical Artificial Intelligence. Robotics, all these androids from Tesla, Figure, Aptronic, or even just cars like Tesla cars. They have all these different machines and partnerships with these companies, and they're putting this on the blockchain in a trustless fashion. In the same way how Bitcoin put money or gold in a trustless fashion, digital gold, they're putting Deepin and DeepI on a trustless fashion on the blockchain. One other project I like, Andrina, also called Dawn Network. They're building a decentralized wireless network. Think of this kind of like the Starlink for Web3. This is an actual device you buy, a dish that you can put on a building, and it acts as a last mile to connect people to the internet. So data centers can take their internet that they have extra of and resell it on this network, right? Or make this available on the Dawn network. And then you don't have to have the device. You can also just have a browser, download the Andrina extension, and with that also be part of that internet, that last mile of the network. I call this the next Helium. If you missed Helium last cycle, this is the next one. Okay, we talked about AI being big. One of our favorite projects in the space is Vana. Basically, think of this as an L1 blockchain, EVM based for AI. Launched on Binance recently. CZ, the founder and CEO of Binance, or former CEO and founder of Binance, joined their board way after we invested. But they're taking data that is being used to train on large language models that's really centralized and making it available where users can actually own that data. They're giving AI models ownership and inference. So it's taking that same Web2 model and applying it in Web3. One project to keep an eye on. Parcel, one of our favorite projects, they're bringing real-world assets, the derivatives of those, as indices, tradable on-chain. What does that mean? If you've heard of Polymarket that went viral during the election season, where people could basically go into a prediction market and bet on politics or anything in between, not even in between, they're taking that same concept and doing it with real estate. So if you want to bet on a city, whether you want to go long or short, you can do that on the platform. So if you think, kind of like me, I'm based in Austin, Texas. If you think the Austin market is about to go up, you can come here and go along the Austin market. If you think a different city, like let's say Boston's market is going to go down, you can go there and actually short. Or you can short and hedge whatever city you're invested in. Definitely want to keep an eye on. It's on Coinbase and some other big exchanges. One of those real-world asset plays we really, really love, Zero Gravity Labs, Zero G Labs. They're building the world's first decentralized AI operating system. They're taking all the different stacks from Web 2 for AI, so from the compute to the data to the models and the agents, and they're building a stack for the Web 3 with different components in their ecosystem. Very, very technical project. They've raised a lot of money. Keep an eye on this one. Then Nillion. So as we enter this Web3 world, they're looking to build a private computing layer. They're trying to build humanity's first blind computer. What does that mean? So we have all this data in the Web2 world that's very sensitive. Think HIPAA data, medical data, financial data. They're taking that data, moving it to Web3, and keeping it safe. They allow you to compute on private data without knowing what's underneath the data. It sounds like magic, but it's very, very complex math and cryptography. And they use multi-party computing, MPC. But basically, you can allow different protocols, different people or apps to look at data without revealing what the data is and still guarantee trust. Very, very complex project started by a bunch of PhDs, but I call this the next Chainlink. I was an early investor in the Chainlink private sale. Didn't hold as long as I would have liked in the bear market back in 2018, and the rest is history, but this is the next Chainlink. So I've shared all these different projects, but there's more. I want to show you how to actually find alpha using our platform on Tokenmetrics, right? Especially if you're a token holder and you're about to take an access, especially with the indices. Let me just show you how you can actually use our platform today, right now that the market is bullish, to invest or find the next big thing. So the first place I like to start is the Tokenmetrics market page. You log in, you come to market. Here it shows you very quickly the most recently turned bullish tokens on the platform. So we see Vana. I just mentioned Vana as one of those products we like. If you're looking to trade it or buy it, you know here it's bullish. I like to skip the bearish because right now we're in a bull run. You can see the best performing bullish signals recently and the top daily performers. We can see, Parcel is here. Wow, it is up 37%. We have some memes, just a chill guy. It looks like it's bouncing back. Zero bro. But this is where I like to start. Especially with the market indicator, which I mentioned, right? So here we know it turned bearish back on January 18th, and we can see here it's turned bullish. So what that tells me is we can go from being cautious and conservative, risk off, to being not all in, but to being risk on, right? We don't have to be as cautious anymore because now we're back to being in a bullish trend. And then from there, once I know we're in a bullish trend and we can take money from the sidelines, from stablecoins, I like to go to the ratings page. The ratings page is where I can come here and see what the top tokens to trade are, right? I actually like to start with trending to see what coins are trending in the market. So looking at this, right? So let me actually zoom out here. We can see that virtuals, an AI product we actually like, is trending, right? This is basically typically trending based on volume, amount of searches. People are searching for these tokens a lot, right? Kind of like here in the top right. It's the same thing here, right? So we know Virtuous is trending, Pendo is trending. What I like to filter for is for liquidity, right? So you can say only show me tokens that have more than 1 million in daily trading volume. Or we can even say 10 million if you want to be safe, and say only show me tokens that have a bullish trading signal. That means a reversal has happened and it's likely to go up. Not always guaranteed, not financial advice, but looking at all the data, the technicals, the quantitative metrics, it's likely to go up. So if we just filter for that, this gives us a nice list of 9 tokens that are trending. People are looking for these, and these could be worth looking at. Then I like to also filter out based on our trader grade. So we'll start here. We'll say only show a trader grade that's 80% or higher. I'll go through how the trader grade is computed. But now we have 7 tokens right now, today, using our AI that are likely candidates for trading. This is if you're a trader, right? We have Virtuals Protocol, Pendo, Sui, Solana, Monero, XRP, and Fartcoin. Right? This is 7 tokens that probably will be good trades in the next week or two. You definitely have to keep an eye on the platform to see if the signal flips back to being bearish or if the trader grade drops. But let's take a look at these, right? So let's go to some of these tokens here. So we'll take a look at Virtuous Protocol. You can see here, the price is up 20%. We can see the signal turned bullish. Trader grade is a strong buy. So over 80% is a strong buy. That's why I looked for that filter. I'm looking for strong buys. If you want to be a little more early, you can actually surprisingly find products that are strong sells that are flipping or have a high change in trader grade, meaning that the acceleration of the increase in trader grade is increasing, meaning that a reversal is likely to happen. Something's about to happen, right? So you can actually come here and find those as well. But this is a good place to start, right? Very simple. You're finding what's hot, right? If you're looking to sector rotate, you can do that. Now, if we can take on Bitcoin, for example, we can see here, same thing. Bitcoin is a strong buy. Has been bullish since basically April 15th. It's gone from 85K to 93K. So a nice little rally there. Now, let's say you want to kind of find more projects that aren't necessarily trending, but could be trending yet in the future, right? This is where you come in. You click on top. This goes through our whole platform. We have thousands of tokens, almost 5,000 tokens or more that we have AI grades for. We filter, this will automatically sort by the highest trader grade. So let me just double check my filters. Let me filter out only bullish. We'll say only those that have more than 10 million trading volume. And we'll do the same thing, 80% or higher trader grade. This is a bigger list we see here, right? We have 179 tokens, but it gives you the top ones to look at, right? If you want large caps, you can do that. So we have here AI16Z stands out. That's an AI play that's bouncing back in this market. Solaire is our liquidity staking project for Solana. Caspa, Brett, the meme coin on Base, Pepe. If you want to be even more ambitious to kind of get down to a smaller list, what I like to do is to add a filter to only show me tokens that have had an increase in trader grade by more than 10% in the last 24 hours. This will get the list down to just 5 tokens, right? So here we can see we have BNB. It's up 13% in trader grade, so it's rapidly rising. We have Near, more than 50% in trader grade. We have 1inch, right? So this is a good way to start. Or if you just want to see what's going up a lot, you can come here and do that and basically just change the different time frames. You can see what's been going up in the last 30 days. So all this is a good way to start to use the platform. And you can actually buy these tokens directly on our platform, assuming they're on-chain and they're liquid. But basically anything on Sol or EVM, you can come here, connect your crypto wallet and buy it. And if you're staking TMAI token, I can actually pull up our token here. If you're staking it, every quarter, a portion of revenues, initially 10% of revenues are being shared with stakers on the platform, right? But yeah, with that being said, this is how you can use Tokenmetrics to go out there and invest in crypto, right? Or navigate crypto. I'm very, very excited for our AI indices. You can kind of do a little mini preview on what's coming. Yeah, so I can give you a little preview on what's coming, but this is going to be a smarter way to invest in crypto. We all know crypto moves a million miles a minute. It's very tough to invest. There's a lot of sector rotation happening. What if you know, hey, this is the hot sector of this month? How do you navigate it? What if you could just buy the AI index or the meme index or the real world assets index, right? This is what is coming to Tokenmetrics. This is our mascot, TMAI. But yeah, this is coming. The way it will work, you have the ability to come here, choose different indices, click buy, fully on-chain. You will be a hot wallet that you control. You can fund the hot wallet and buy this portfolio of indices and manage them. You can choose when to sell. It will rebalance on a regular basis. Initially, we'll be launching with weekly rebalancing. It will be based on top market cap. So think like top 10 market cap for AI agents or for real world assets or for DePIN. And then we'll be adding our market indicators. So when the market goes to being bearish or bullish, it will basically let you know and sell the stablecoins. Because it's built on chain and due to the on-chain trading fees, it won't be triggered based on our trader grades because the indices won't make as much money due to trading fees. But we are working into all these. This is the first iteration and first launch, the first big launch. This is what people have been asking for since we launched Tokenmetrics, and very, very excited to finally bring this to our token holders and users and customers. And this is us becoming an investment platform. It's a smarter way to invest and trade crypto. So this is coming, I'll say within the next month, right? May is going to be a big month for Tokenmetrics, and you want to make sure you get on board. I want to make sure we all benefit immensely from what we think is going to be the biggest bull run ever. Because I've showed you, it's not just crypto, it's crypto and AI tied to the hip, intertwined. So the way AI is going is the way crypto is going. So definitely check it out, whether it's our platform, our token, the book. We also have a newsletter you can sign up for free. Just go to research.tokenmetrics.com to sign up for our newsletter. We have daily market updates. We have daily code reviews, deep dives, and hidden gems. We go through 20, 30, sometimes 50 projects a week. Pick the top 5 we like, those that haven't launched yet and those that are about to launch, and we put it out as a newsletter. So definitely go check it out. Highly encourage you to check out our platform, tokenmetrics.com. Sign up now. If you need a coupon code, creating a coupon code just for you, just for this video, that will give you 40% off. Yes, 40% off. We know it's been quite a brutal, bearish trend since the beginning of January. So we definitely want to empathize with anybody out there who's been just trying to navigate this market. So 40% off coupon code. The coupon code is TMAI to the moon. Coupon code is TM, the letters TMAI, like our token, to the moon. Go type it in. It will get you 40% off. With that being said, the moon is not the limit, to the moon and beyond. Thank you.